Welcome, everybody, to this week's True Potential Do More With Your Money podcast. This is episode 43, and we're recording this on Friday, the 13th of November. Unlucky for some, but not for you, if you held your nerve and stayed invested over the last few months, because this week has been really positive on the markets. We got a winner, if not yet a loser, in the US election, and earlier this week came news of a successful vaccine, all of which has sent stocks soaring. So we'll hear more of that today from Mark Henderson, from Jeff Casson, and Daniel Harrison, who are joining us this week on the podcast. Welcome, everybody.
Good morning, Peter.
Good morning, Peter.
Good morning.
Hi,
Is anybody feeling superstitious today with it being Friday the 13th?
No.
Peter.
All the bad luck points have surely been used up this year already.
I hadn't even realised, Peter, I hadn't connected Friday the 13th until you'd mentioned it there. So if anything goes wrong this morning, it's all down to you.
That's right. Are you feeling worried now that I've mentioned it then, Mark? Have I spoilt your morning already?
You have, Peter.
Yeah,
you have. If I disappear.
Oh, dear. Well, let's get off that subject very, very quickly then and talk about something far more positive, which was the vaccine this week. I know we'll get in, Jeff, shortly with what that has meant for markets, and we'll talk at length about what it may mean for markets over the next few months as we look ahead. But is everyone just feeling a bit more positive then? I mean, it's been a shocker of a year, as you just mentioned, but I'll come to you first, Jeff. Are you feeling a bit more upbeat, let's say, now? We've got a prospect of a vaccine on the horizon.
Well, I think it gives us the hope that we've all been looking for, that at some point over the coming 12 to 18 months, we can move back to some form of normalcy, whatever that may look like going forward. But we're certainly a lot closer to it. And I think the other thing that it really gives us, vindication about is the science around it, what the scientists have been able to achieve in a relatively short period of time, and the progress that has been made there. The other side of it, we've got 8 other vaccines still in phase 3 trial, and if we could get positive news in each of those, the ability to actually run out and vaccinate a large proportion of the population becomes much easier and much clearer. So yes, a lot more positive this week than I probably was 2 or 3 weeks ago.
Good. Daniel, I'll get your view. I know we'll come to Mark in a moment. Mark's probably in line for the vaccine, because it's going to be delivered by age. But unfortunately, you and I, Daniel, we're not even on the list. But so a bit of a disappointment, but no doubt you're still feeling quite upbeat.
I think just upbeat, Peter, just to see some good news for once. I think, as you say, we'd be lower down the list. I think that was very rude to call Mark old as well. I think it probably hurt his feelings. So you've already told him it's Friday the 13th, but that's hurt his feelings and scared him. And now you've called him old on a podcast. So
I thought I said older, but anyway, let's split hairs.
I think Mark, me and Mark knew. Mark's been my mate a long time, Peter, so I'm sticking up for him. But I think it was just good to see some good news. Markets obviously reacted very well. Plus, it's introduced a whole new polarized campaign on Facebook now, because we've now got the "I'm not getting the vaccine" crowd. So we've now got something new to argue about on social media as well. So that's always fun to watch.
Mark, are you arguing on Facebook about it? Presumably you're not.
Well, Peter, you may not be on the vaccination list, but you're very definitely on another list now.
The naughty boys list.
I think it was inevitable, wasn't it, that the opinion would be divided. Are you going to have the vaccination? Are you going to let Bill Gates put a microchip through this to control, all of that sort of thing that we heard months ago is starting again. What's good about it, Peter, is it's filtered through into the portfolio performances. So I want to get that out straight away, that it's been a great week for the markets. The balanced portfolio that we all always talk about, because it's where the majority of clients sit and it's right in the middle of our 5 risk profiles, is up nearly 3% on the week as of last night's closing prices. And it's really putting the performance back into where we want it to be within the funds. They're not pure equity funds, but when the markets do pick up, that sees its way through. Over 6 months, the balanced portfolio is now up 10%. And it plays into one of the things I know we're going to discuss later, which is volatility, and why we were saying back in March and April, please stay invested, because if you come out now, you won't get the benefits of this when it does pick up. It's not to say that we knew this week there was going to be a vaccine. We couldn't have said that, back in March, that November this news will come through. but it was welcomed right across the globe. In fact, Peter, there's only one place I could see that it wasn't really welcomed, because I tuned into Boris Johnson at 5 o'clock on Monday night, where we'd had a fantastic day in the markets. Everybody was upbeat, and then I switched Boris on, and he just poured cold water all over this. So I lasted 10 minutes with him on Monday. I thought, you don't need to tell people to stay in tonight, Boris. They're not going to rush out. There's not going to be parties in the gardens to celebrate the news of a vaccine. We're all sensible enough to understand that this is coming. There's another one in, Peter.
Oh, good. Tick.
The jokes are coming through. They'll be revealed later on. But what we know is that we've got a vaccine. But again, as we said in one of the podcasts going back into the summer, when the vaccine comes, the next stage is vaccination. And it's the logistics around this which are important. And those vulnerable groups, and I'm pleased that you think I'm in there, Peter, because you'll be kind to the office. But I think it is important now that we look at how this is going to be rolled out. But it is light at the end of the tunnel, and that was the news that everybody was waiting for.
Yeah. I think there was one other place where it potentially wasn't welcomed as much, which might have been the present incumbent of the White House, who felt that it might have been just held back a couple of days. Had that news just come out a week or two earlier, might have helped him. Do you think there was anything going on there, Jeff?
I think it was a good job that it didn't come out during the past 2 weeks. I think Pfizer have been very shrewd as how they've managed that data and brought it out. So bringing it out.
Sounds like you're suggesting some kind of agenda there, Jeff. Would you like
to
elaborate?
I don't think you'd want to bring that sort of news out in the run-up to the US election.
Yeah.
Would be my take on that.
Yeah. And Daniel, before we'll get into the markets in a moment then from Jeff, but just is this lockdown week 2 now? I completely lose track of where we are in lockdown 2, week 2, but give us a quick overview of how True Potential's doing then. Now we're into the middle of November. People are working from home, but things are positive, right?
Things are really positive. I think, as I mentioned before, it's nice to see some good news on the markets. I think I mentioned just last week, Peter, when we were talking, because we had a couple of questions from clients last week, almost semi-panicking by some of the sell-off that we saw at the end of October. And one of the things that we talked about was that's what markets do. It just so happens at the moment we're getting these kind of extreme swings, and this week's been an extreme swing upwards in the market, so it as Mark said, for everyone who's held the nerve and stayed within there, that's been great news for all of our clients, been great news for True Potential. But then if you look behind the scenes, really, I think advisors and clients out there are just, they're very optimistic at the moment. We're seeing record levels of business on. I talked about October was our best month on record in terms of new money being investors into the True Potential portfolios. We're about halfway through November now, and we're looking to smash that figure from October, which is great news for us as a business. I think it probably reflects the real optimism which is out there with advisors, with clients, where they're seeing the opportunity now to invest and find a good way to kind of do more with their money to introduce a True Potential marketing spin within there. But yeah, lockdown, I think it's a week and a half now, Peter. I think, was it last Wednesday we closed, or was it Thursday?
Yeah.
I think you're right. It's darn tricky to keep up to date with it. But I know we're over a week now of the latest lockdown. So my walks have started again. I've been all around the Northumberland countryside, phoning people, annoying people, and catching up with the team. But things are going very well. Roll on December the 2nd when we're all allowed back out again, of course.
Yeah. Or hopefully we're allowed back out on December the 2nd.
Well, yeah, absolutely.
And just to be clear, this December the 2nd, that's the other thing.
Jeff, are you allowed out in December the 2nd, Jeff, or is it have you got a different set?
It's a very good question. I've got a 69-page book of rules for Scotland if you're interested in reading it all. Where I am, and we're in tier 2 effectively, so I am in a much more relaxed situation than south of the border, which is quite different. So we can get out and about as much as we really want at this point in time.
Can you still go to a pub, Jeff?
Yes, but
Yes,
you have to be outside,
an outside pub. Got it. Well,
which
that
is
was been fun
not
last
very
night.
enjoyable.
Well, Scotland qualified last night, so there have been a lot of people with hypothermia. They qualified for the European Championships, so there have been a lot of people out there in the beer gardens last night, I would have thought.
First time since 1998.
Yes.
But disappointingly, Northern Ireland just missed out. That was
I saw
the
that.
frustrating aspect of last night.
Yeah, I did see that.
Ireland had a bad night because they got walloped 3-0 off England, and I think their lockdown's been extended, hasn't it? Or the Northern Irish one certainly has. Sorry, Northern Ireland. I think they're back in for another week, aren't they?
They are indeed, yeah.
See, just goes to show once you're in, you can't get out.
Which is very pertinent for the December the 2nd point as well.
Correct.
Come on then, Jeff. Mark teed it up perfectly before, but let's get into the detail then. So, a great week, but tell us exactly how that played out on the markets.
It has been a great week, and it's been one of the strongest weeks that we've seen in markets for an awfully long time. It's quite easy to forget, actually, when you look back in the week. We were waiting for the result of the US presidential election at this time last week, and for how that was going to play its way through in markets. Yet we move through to Monday. We get the news from Pfizer just coming out around lunchtime before the US market opens, and it completely changes the shape of how people are thinking about the future. And very much like us there at the start, talking about the optimism that brought in. It did bring optimism into the market. The market is very much driven by sentiment. Sentiment changed quite quickly on Monday. And by that, I mean how it changed both at an individual level, but also within the market. So we've talked on these podcasts over the past number of months about the strength of the technology sector in the US, the strength of healthcare, and how that's provided leadership to the market. We saw probably in the time that I've been involved in markets, 22 years, the biggest rotation that I can remember on Monday, with the movement from growth, quality, momentum into the more value areas of the market. And by that, I just mean those that have been more impacted by the COVID-19 restrictions. So think about oil companies, think about banks, think about travel and leisure businesses. A tremendous change in the market leadership on Monday. And that played out over Monday, Tuesday and Wednesday across markets, with great performances coming through from broad equity markets. But even looking at what's happened there over the course of the week, up 14% through till sort of Wednesday, when we were getting all this positive news coming through. Banks, broad bank index is up 26% over the course of the week as well, across different areas of the market. That's great to see. We run diversified portfolios. We have exposure to those. We don't have exposure to one particular area. And that's been something that we've been really keen to talk about through the course of the year. Yes, people have focused in on the growth that's been coming in leadership from small areas of the market. We've really spoken about the need for diversification. And that is crucial when you get those types of turns in the market. As Mark has said, it's allowed the balanced portfolio to participate in that. If we had just been very much exposed to growth or certain areas of the market, this would have been a very different podcast. We'd have all been somewhat downbeat. And it just speaks to the need to have diversification in the portfolio, but also just thinking about what it means for other parts of the asset classes that we're involved in. Corporate bonds, high yield bonds, emerging market debt, all areas that also benefited from that shift in sentiment, and sentiment that's shifting because they can now see to the end game, thinking about a recovery in economies, thinking about a return to something that is back to where we were in 2019. And that has really fed through and been really positive for our end clients, and focused in on what it is that's crucial to how we build portfolios: diversified exposure to asset markets.
Yeah. And Jeff, you often talk about the global expertise that we have within the portfolios. And has the good sentiment you just mentioned, is that been felt this week across the globe? Is it really gone right around?
Very much so. And that has been one of the sort of the key factors of what we've seen. it's been very much not just something that's been focused in on Europe or the US. That rotation has played out in all other markets where value as a style has been the dominant style over the course of this week, and that's been something that has been out of favour for 10 years. Value as a style hasn't really worked, and we've seen it come through now. The key question that we're all asking ourselves is, how does this sustain over the coming weeks and months? And that's been a key part of the discussions that we've been having with our fund manager partners over the course of this week, where we have been engaging with them, all of our managers, just to get their view on what's happening, what changes they are making to the portfolio, and how their view about the future is starting to evolve given the news of the vaccine. Now, nobody's going to make a change in the portfolio on one data point, but they're looking for incremental points of improvement. And that's why I was just saying at the beginning, it's important to see how these other trials go over the coming weeks, because that will add support to that positive sentiment about a return to a more normal environment for us all.
Yeah. Well, you touched on it there, looking forward. And I remember, I think Mark's spoken about this before on the podcast, about how we take a forward-looking view rather than acting in retrospect. And maybe just are you able to expand a little bit on just those kind of conversations you're having with those fund managers and how they see maybe the next few weeks and months panning out?
I think, where do they see it panning out? So they see it bringing back, and what does the vaccine do? It gives people confidence. So it gives us confidence as individuals, as consumers, to go out and potentially spend. So that's a positive from an economic growth perspective. But even more importantly, it gives businesses a degree of positive sentiment, but then to start and invest. Investment and consumption is crucial to get economic growth moving forward. So that's one of the things that the managers are looking at. They're also looking at some of the more high frequency data, or the more sort of mobility data and things like that, to see how people is views evolving. Where does that play out in things that they're thinking about? So how do they get more exposed to some of the economically sensitive sectors? So looking at banks, for example, how do they think about that within small and medium-sized companies, those that are probably more aligned with the economic environment in a country as opposed to the mega caps? And then thinking about how at different sector levels they want to have that exposure. Do they want to have energy, given where the oil price has got to, but where demand may come back to over the coming months and years? So lots of discussion, lots of retesting theses that they have in place for various different positions, but also looking to how they can best capture that going forward. So really interesting discussions with their managers and starting to see them incrementally make some change. And I think that's the important thing that we want to get across, that the managers themselves are all constantly reappraising positions, looking to extract the best possible outcomes for our end clients through the active management of those strategies on a daily basis, taking advantage of the opportunity that rotation is presenting them.
Peter, I think it's also interesting to look at this. As Jeff said, diversification is important. If we just take the UK market, which everybody's familiar with, over the course of the month, the FTSE 100, which is what everybody tends to look at, and you see this on the news coming through, how the UK market's done, is up 6%. The FTSE 250, which includes, funnily enough, an extra 150 companies, but smaller companies in that, is up 7% on the month. But when you take that further out over 6 months, FTSE 100's up by 9%, the 250's up by 20%. So there's a need for active management within the portfolios there. You know, that we will make decisions, and we have been within our own True Potential funds and also the True Potential portfolios to start looking at smaller companies. And I'm pleased to say that we made the move in time to benefit from the uplift that we're seeing in not just UK smaller companies, but also the same in the US and on a global basis. And I think also it highlights why, as Jeff said there on the sector rotation, why you can benefit through active management instead of just following index trackers, which have a place. They have the place in our portfolios to bring down the cost. But when you need a real driver, active management is the way.
And Mark, you and Daniel, obviously, as founding partners of True Potential, you talk regularly about skin in the game and how being invested in your own portfolios and your own firm is a really important philosophy that we have, and I think it's correct. But have you got any questions for Jeff? Because you must be listening to that good news and thinking, this gives me a good feeling about the future. So I'll let you, while we've got some positive news, I'll let you chuck a question to Jeff if you've got one, you or Daniel particularly.
You're putting Jeff on the spot.
That's the idea.
Putting everybody on the spot.
I think it's not a question, but just a statement, really, Peter. I logged into my website this morning just in preparation for the podcast. So I think skin in the game is a great point, because we're invested in everything. All of us on the line today, me, you, Jeff, and Mark. We're invested in what we're talking about on this podcast. So we know when markets are up, we know when markets are down. We see the fantastic results, which Mark and Jeff have been talking about then. So, talking about happy news and sharing some good news, because I'm conscious probably the last 6 or 7 months at times, there hasn't been a lot of good news to spread. If you are a True Potential client, I'd urge you to do what I've did today. Log into your app, log into your website, and just see what's happened to your money in the last week. You can see the recovery. I've even ran my money back over the last 12 months, just earlier today as well, and it's up. It's it's not as up as much as maybe what we'd like it to be, but it is in positive territory. And I was speaking with Jeff yesterday on email about kind of where do we think markets may get to by year end. We had an advisor asking us about the FTSE. And what Jeff and I were saying as well, it's not just really about the FTSE, it's about the world, it's about diversification side of things. So I'm not going to put Jeff on the spot and say, where do you think the worldwide indexes will end up? That's a dangerous prediction, but that's maybe a bit of fun that we're looking to have with our advisors and our clients before year end, to see if we can have a bit of a competition to see, where we end up there.
I think from me, Peter, as you say, that Daniel and myself have been invested in the portfolios right from launch, and again, just taking this over a 5+ year period, because it's 5 years and 1 month since the portfolios were launched. Balanced is up 36%, aggressive is up 53%. So the returns have been there, and it's really interesting to look back and say, right, from launch to now, you've got that sort of return. In between time, you've had lots of different events which have happened, but sitting into the portfolios and being able to stay there is vitally important. And we do see examples of when a client either needs money or just thinks, right, I can't sit here any longer. And one or two felt like that in March. And it's such a shame that they've missed out on those returns that have come. And they've come back quickly this time. They've come back quicker than other crises have seen markets. And I think that, coming on to a question for Jeff, I think that for me, I don't have any real surprise questions, Jeff, that I'm going to blindside you. I know Peter was hoping for that, but I wouldn't do that to you. I think that the real key for me, Peter, in the future going forward is going to be is how the new US administration interact with China, because you've got still the political pressures which are going on there. You've got, I know there's legal challenges that Trump is going to put in place, but he will be out of the White House by the 20th of January.
Does anyone disagree with that? Does anyone think that there's a slightest chance that he can overturn the result?
No.
You can probably tell he doesn't fancy his chances, because he's a lot quieter this week as well. Yeah.
Sorry.
So it's also interesting, just overnight, you've seen the Chinese Foreign Ministry congratulate Biden on victory, or President-elect Biden on victory. So I think they've also moved on and are thinking about that. But at the same time, you've President Trump back on Twitter and banning US firms from investing in Chinese equities. So there's an interesting.
Well, he's also banning Joe Biden from having an office and access to intelligence and all the rest of it, because normally the president-elect would be given state support and all that, but he's apparently parked up in some theatre somewhere because he's not being given access to any of the state material and state assets, which just kind of sums the entire thing up. But Mark, I was going to just ask you there. I mean, you talked about it, ups and downs, and how we've ended now in a really strong position coming to the end of the year, but ups and downs, bumps along the way, and also, of course, throughout the life of the portfolios. But this goes to a really important point that Daniel talked about last week, which is volatility is just part and parcel of being invested. And the key is to hold your nerve. But can you just talk us through in a bit more detail for maybe people who are watching this, clients who might be watching this, who maybe this has been their first foray into the markets. Maybe they're new clients, newly invested into the markets. So Mark, just talk us through a little bit around why this is okay. It's maybe an exceptional year, but volatility is not exceptional. That's always there, and the key is just for the long term. Correct?
No, yeah, absolutely right, Peter. And I think that to start off, that to me, there's no real alternative to investment in the markets, investment in the portfolios, because the return on cash is simply not giving you any return at all, particularly when you take inflation off. So you've got historic low interest rates, you've got low inflation, but it's still eating into the spending power of the cash reserves that people have. And that's exactly what cash is for. It's to be spent. It's not a long-term growth engine at all. So why invest in the portfolios? Why do we get volatility, and how do we handle it? I think it's important that we set out how we manage the portfolios and the underlying funds, which are the building blocks of those portfolios, because they're all true potential funds. Now, we either manage them ourselves in-house, where we've got $1.5 billion in our own funds. For the other money that's in the portfolio, which is $8.5 billion, we employ managers, but they run our funds. We're not buying other stocks. We're not buying other investment funds. We employ the best managers to run those funds. And the conversations that Jeff's been having this week are talking to those managers to find out what they think is going to happen in the future, what they've done over the past month, and the positioning, etc. So it builds on that forward-looking point that you had. And for clients, we are feeding those managers with daily cash flow, so they have money available to invest each and every day. Now, it's important, that fact, because it means they can buy the investments that they want to using the cash that they have without having to sell anything else. So it's not a case of, I want this, but I've got to sell that to get it. They can buy what they want, and they can maintain what they want and add to that through the cash flows which are coming in each day. The other thing, Peter, that's important is the managers themselves will retain a level of cash within the portfolios. So if they think there's going to be periods of volatility, we will build up a cash reserve, and then we'll employ that in the markets when we see the bargains coming through. So that's how we use volatility to build on the returns that are in the portfolios. For clients who are invested with us, they don't need to think about taking money out of the market and holding cash, because the cash is already within the funds, and that decision's been made for them at the appropriate time by the managers and by us. So volatility, it's not nice. I think it was you that said, it might have been Steve Hutton a couple of weeks ago. It's a bit like turbulence on an aeroplane. It can either be just a little bit of a wobble that you spill your drink or your food ends up on your lap, or it can be something more severe. But the pilot and the crew are there to get you to your destination, and they'll have experienced that before, and they won't panic. And I thought that was quite a nice way of putting it, which is why I've repeated it. So volatility.
It'll not Steve Hutton saying that then, Mark. If it was sensible, that doesn't sound like something Steve. I could see Steve talking about spilling a drink on his lap, but I couldn't see him saying anything more sensible than that.
I've seen the strangest thing happen to Steve Hutton, Dan, with a drink where, without any warning whatsoever, the bottom of his gin glass just fell apart, and the whole contents of a new drink ended up right in his lap and all over his trousers. Yeah. And honestly, it wasn't clumsy Steve at all. It was an act of God. It made us laugh. I think we couldn't do anything for about half an hour afterwards, and he's just looking dumbfounded at that.
And that was nothing to do with turbulence, was it, Mark?
It wasn't. It wasn't, Peter. It was. It was one night in London, and we'll leave it at that.
Jeff, just to pick up on Mark's point there about then volatility not keeping a hold of your dinner or your drink on an aeroplane, but if you've got any, particular advice on that, I'm sure be always welcome. But on volatility, you talk about something called the VIX index, I think, don't you? Which is something you keep your eye on in terms of volatility. But maybe just explain to people who haven't heard about that what it means and how you use it.
Yeah, so the VIX index, or as it's sometimes known as the fear index, so it looks at forward implied volatility, i.e. so the movement in prices in 30 days in the future, and it just gives you an indication how people are thinking, because it's based on if people are taking hedged positions or not on the future outcomes. What does that mean? Effectively, they're betting on prices rising or falling, or the volatility around that. And so as that rises, it gives you an indication that people are concerned about the future and concerned about the outlook. And the VIX has moved quite dramatically through the course of this year. So we go back to March of this year, we had a significant spike up to sort of close to 80. The long run average is about 18. So that's quite a significant move for markets to take on board. And then we've seen it gradually come down over the course of the year. But then into the US election, we saw it spike again, spikes up to 40. We saw that, as Dan had mentioned earlier, as to what was happening towards the end of October in markets. So markets seeing that, being a bit worried about it, the volatility there and prices coming off. And then we've seen it gradually come down over the past number of days, and indeed come down further on the news of the vaccine from Pfizer. So it's a great indication for us to look at and get a sense of how market participants are thinking about future volatility in equity markets. There's a similar index that you can look at for the bond market as well. So both of those and the interaction of those give us a sense of how markets are positioned, and also how people are thinking about the risk within markets. I think the other thing just to add about volatility and the journey that one wants to create for the clients, and the role that diversification can play in that, it's about mitigating the magnitude of the drawdown. So as Mark said earlier, we aren't 100% equity. We have other pieces in that pie that mitigates that journey for our clients. And what you don't want as an end client is significant periods of drawdown, and those eat into your longer term return. But as Mark's discussed there, over the 5 years, the portfolios have delivered exceptionally well for our end clients. Within that, there's been periods of up and down, but managing the drawdown within that has also been crucial to delivering that smoother outcome for clients over the medium to longer term. We can't get away from volatility, we can't get away from drawdown, but what we can do is, through the construction of the portfolios and the various instruments that are in them, help with that journey, so that we are delivering a return that is much better than being in cash, or the negative return, the negative real return that you get from being in cash. And that's what we seek to achieve with the portfolios.
And Daniel, we've heard obviously the technical side of it from Jeff and Mark, in terms of how the volatility to spot opportunities and to mitigate some of that risk. But that's their job, right? But from a client point of view, you don't want to worry about any of that. All you do is let the experts get on with it. And obviously, I'm speaking to you as a client, as well as as the chief executive of True Potential. So from a client point of view, and you mentioned it before, you almost want to just let Mark, let Jeff, let their colleagues sort that out, and you just have your long-term goal, keep focused on that, invest it for the long term, check your app periodically, and let the experts do their job, right? That's the best approach, isn't it?
I think it is. We used to use an old marketing phrase, which is investing on autopilot, which we don't use now because we can get a snappier title in there. But what did that mean, really? I think if you look at what the makeup is of the investment management team at True Potential, you obviously have Mark, you have Jeff, you have Chris, you have George, who everyone's met before on the podcast, but they're just some of the team amongst there. You have an entire division at True Potential who every single day are waking up early, and they are up early because I see the emails coming through, whose only job is to focus on the True Potential portfolios. And they have working for them, and that is the important part about how True Potential are different in terms of how we manage the money. Working for them are some of the best fund managers in the world. Everyone from Goldman Sachs across the Allianz to UBS, and and everybody in between. Those teams are working around the world, different time zones, different markets. They have different investment styles as well. So some may favour pure equity play, others may favour a more passive play, and again, everything else in between. So what's happening is 24/7, people are working on our clients' money. They're looking after the clients' money. Jeff and Mark and the team, they're providing the overlay, they're providing the diligence, and they're providing the guidance, and but they're just one of a cast of thousands out there who are looking after True Potential's cash and investments every day. And I think that's the reassurance point, that it's not just one or two of us waking up and looking at the FTSE and thinking, oh, we better pick some good stocks. It's far more elegant and smarter than that.
I think it's a great point to bring out for everyone that's listening, that access to those managers is really beneficial for our clients. The insight that we're able to take from them and think about how we want to potentially tilt the portfolios and take advantage of some of the things that they are doing. Examples of that, if we think about some of our managers with dedicated Chinese exposure, they've analysts on the ground in Hong Kong and China that are able to feed back up into our strategy. That's just not something that we would get if it was just one or two people sitting here doing this ourselves. That's great access, it's great knowledge, and it's something that where we can make a difference and use that to make a difference for how we are managing the portfolios and how they are implementing things within the portfolios for our end clients. So it's crucial that people really do understand the opportunity that investing through the True Potential portfolios is giving them, with that access to world-class talent across the globe.
Mark, do you ever feel like an unsung hero? You and the team do all this wonderful work, and you talk about the great returns since inception there. Do you feel you ever get enough credit, Mark?
I cannot answer that one correctly, Peter, because no matter what I say, you'll have some sort of comeback. I think I tell you, Peter, March of this year wasn't a nice time, and we try to act in taking into account all of the information that we have. And I'm just going back into March now, where you're looking at the screens, and it was going at such a rate that you couldn't react quick enough in order to catch anything. And it was at that time when we had faith in the diversification model. We'd seen it come through previous episodes, and it had been stress tested using past historical events, and we knew the portfolios would react in a certain way. And when we say they reacted as expected, I tried to get that sort of phraseology out of the vocabulary, because a client could argue, if you expected that to happen, why didn't you act beforehand? That's not what you mean by it. They reacted as we expected. But it was a very, very unpleasant time. But we did have faith in the model. And that's why in March, we were sitting in front of the cameras, virtually every day, talking to advisors and clients and saying, look, please sit still. We will see you through this. The portfolios are positioned. They are relatively defensive because of the selection that we had in there of the mixed assets, but they will be able to benefit from the upturn when it comes, and it will come. So it's really faith in the markets that we had and experience that led us to speak with confidence at the time, even though it was unpleasant. And I think that the other thing, Peter, is we never forget whose money it is. You can become very removed in financial services from the most important person in the equation, which is your client, our client, the investor. And it's their money that they're looking after. So I remember Jeff having various meetings and just coaching people as to how to speak to advisors and clients. And remember that the client is always in the room with you. So you must speak in a way that can be understood. Don't lapse into industry jargon. Don't don't be flippant about things. Recognize the severity of the situation, but also have confidence in the offer. So are we unsung heroes? No, it's our job, Peter. This is what we're paid to do. We're in a privileged position because people trust us to look after their savings, and we will never forget the importance of that. And this week it was nice. I can say there was a real buzz about the team, even though we couldn't be in the office together to experience it. You could tell on the meetings that we had, the virtual meetings, that people were happy. They'd seen the markets go up. The screens were green up to the point where the Pfizer announcement came, and just suddenly they shot up like that. So it was a decent day anyway. And as Jeff said earlier, we're only a week away from, or a week gone past the US election, and that instantly was forgotten about because of the Pfizer news. And I think it's situations like that. It's nice to be on today on the back of a really good week, but we won't shy away when the bad weeks come as well, because as you said, volatility is still around. There'll be something comes along, but what we can say is, look, see how things reacted in 2020, and have faith in the multi-asset and the diversified approach, because we will put your money, we'll employ your money to get positive returns over the medium to longer term.
Yeah, and you made a great point there about the client, but that's the most important thing. Where it's in a privileged position to look after their money, which I think is well said. Daniel?
Yeah, I think Mark mentioned a great point there about 2020 being almost a proof of concept for the right ways to invest in it. But I also think 2020 has been a great example of the type of businesses and the type of approach that's going to work, moving forward. We're probably living in a period right now, makes me sound old, but we're probably in a period right now which will get studied at universities and schools about, as part of MBAs and business studies out there, which is about how have companies successfully adapted to change and using technology. Certainly, I think technology is really taking a big jump forwards. I can't remember if I've said this on this podcast before or not. Apologies if I have, but we're working with an interior firm at the moment at head office about reshaping how we work moving forwards in head office. And his view, and a view really amongst the architecture industry, is that 2020 has effectively leapt us forward 20 or 30 years in terms of working patterns. It's just happened like that. Even the fact we're doing podcasts like this is a bit of a leap. I remember, we obviously started doing this weekly podcast series at the beginning of this year. We were all in a room. And then, as we began to get more conscious about COVID, we began sitting further and further apart. I remember sitting a meter apart from Jeff like that, and then next thing we're back on these calls here. And I think hopefully our listeners agree that the quality of the broadcast hasn't suffered as a result of that. But I think what everybody will be doing is as we move out of this period, and obviously we're not out of there yet, as Jeff said, we're still probably 12, 18 months away from the vaccine really being a success or not. We're not there yet. But I think everybody will take stock and change about how they want to invest, what type of businesses they want to deal with as well. And I think now it's not good enough for any business to be still blaming shabby service or giving an inferior product because of COVID and Corona, because it's not going away out there. So I think we're going to see more of a shift in consumer and investing buying behavior yet.
I think there's a couple of really good stories in there, Daniel. One being about how True Potential as a business has just got stronger and adapted, and what that's meant, maybe brought forward some of the ideas in terms of a physical layout, but maybe brought forward, or at least perhaps shown some of the technology decisions that you and the team have made over recent years have really come to the fore. There's a great piece in there around just how, why, if you like, True Potential is one of those businesses that's got stronger when so many unfortunately have not. But I think also to Mark's point, and this perhaps maybe goes into the next True Insight magazine, is just the inside story of how you and the team, going back to March into where we are now, the decisions you had to make and what it was like from your side. We know what it was like from clients. We're all clients, but just bit more on the kind of background of the decisions that you had to make and what it was like. I think it'd make a great read, by the way. We talked about volatility before. One issue we haven't touched on today, but will come to the fore, is Brexit. And we're now I think we have less than 50 days, maybe 49 days from today until we're out for good in terms of end of the transition period. Any thoughts on, from a volatility point of view, how that might, or what are the opportunities possibly around that, Jeff?
I think, Peter, it's something for us all to think about, and how this does pan out over the coming number of weeks. The clear thing that we've been able to pick up and see in the market at this point in time is that there hasn't been a lot of volatility in sterling, and sterling has been one of those areas that has been sort of the lightning rod for people to express their views around Brexit through. So sterling has been pretty resilient over the past sort of 6 weeks, and it stayed in at that sort of 130, 132 range against the dollar. And that's where I suppose there is opportunity for people to express it. But what's interesting, I think, this past week in particular, is just what we've seen within the equity market, particularly within the FTSE 100 and the FTSE 250, and the performance that we've seen there. So some indication that maybe people are trying to look through this. I'm not saying that there won't be more volatility as we get closer to seeing what shape the agreement is that we managed to come up with, which will, going back to, I suppose, where we started this conversation, that will allow businesses to get confidence in their investment plans, how they're going to interact going forward. I do think it interesting that we've seen some people suggest that businesses aren't well prepared. Time will tell. But I think people have had long enough to know that this is coming. It's effectively, what does it look like when we get to the end of this month? It looks as if, we were meant to hear it today as to what the shape of the agreement was to look like. It looks as if that's been extended for another week in terms of discussion. So it will and has the potential to introduce volatility. But going back to what we've been discussing here, it may provide opportunities in particular areas of the market. Certainly where the UK market is from a valuation perspective, it's attracting international interest. We've seen an awful lot of M&A over the past 2 to 3 weeks. So companies coming in and buying listed UK companies at significant premiums to their share prices. So, for example, even within our portfolios, we had exposure to RSA Insurance, one of the large insurance-based businesses here in the UK, with exposure in Canada and the Nordics region. Consortium come in and bought that company at a 50% premium to its current market value. So that gives you an indication of how external people who haven't been involved in the UK are starting to see value being available because of that discount that has been placed on the UK equity market. So if we can move through this, I think it would be a real positive for UK Inc., but also for the UK market, because it will remove one of the big discount factors that has been applied to UK assets.
Yeah, you mentioned there the talks that have continued this week, and you're right. It looks like they're going to go run in for another week, and then I think there's a virtual, just like this, EU leaders summit coming up later this month, by which point they want to have a deal done. But how many times have we said that before? So yeah. Let's see what happens. Speaking of volatility, Jeff, been a bit of volatility in Downing Street this week, hasn't there? What have you made of that?
Been quite a few comings and goings, hasn't there? Very nicely teed up. Well done.
Do you think? I'm just interested. I mean, I suppose most people. It's amazing, actually, just on that point, looking at on Twitter and stuff, and seeing how the political, communities really go to town on this. And I just feel for most people in the country, they must think, I don't know who half of these people are, let alone why we're talking about this. It just seems like a silly circus happening at the time of still an important moment for the country. But do you sort of despair when you see that sort of stuff, Mark and Daniel? You just think, what on earth is going on down there when we're trying to sort the country out and get this vaccine rolled out, and here we are in the middle of a playground spat?
No, I think a lot of people didn't maybe quite know who Dominic Cummings was until he went to Barnard Castle. I know some people do, but I think until then, and it's not up to me to say was that handled well or was it handled badly. But there's been a target on that man's back before that, and I think that just made the target larger still. I think anybody who comes in kind of openly says he doesn't like MPs, openly doesn't like the civil service, time's always going to be, it's always going to be limited. I know what he said is he'd always hope to be redundant anyway by the end of this year if he's done his job correctly. Time will tell if he's done his job correctly, because as you've just said, Peter, we're into November now and we still don't necessarily have a Brexit agreement from there or any likes of a proper trade deal. Whereas I think if maybe Cummings and the advisors have been doing the job, we maybe would add a bit more certainty with that side of things. So is he leaving as a failure? Is he, I don't know. We'll find out in the next 6 weeks, but if and when he leaves. But does it seem like I think it's a great summary of what we see when we have to deal with the inside track with politicians, and it's an odd world there. It's not all very kind of civil and formal and hail fellow, well met. It can be like a playground there, and whenever somebody trips over, there's a lot of dancing and a lot of like kind of childish celebrations, I think.
I suppose that's what we've seen to an extent in the US as well.
Yeah.
The use of Twitter as a medium to conduct international policy is not something that has been the norm prior to Trump coming in, and it's something that really does roil markets when you see these things coming out at the middle of the night and a policy change towards a particular region, be that China or be that elsewhere. So even there, if Biden can, he's not going to be the same. He's going to be different. So we'll get something that takes us back to more of a more normal president, if that's is the right term to use, which I think will help markets. Political risk when it's elevated is a negative. It feeds into just volatility because you don't know what a tweet can do. So if we can remove that and have that put back in its box, it allows us to move forward into a more normal operating environments from a risk perspective, from a political risk perspective.
Yeah.
No, it does, Jeff. We talked about this a bit last week. We had a question saying what type of president do we think Biden will be like, and we used the exact example you're talking about there with Twitter. Hopefully it's the end of policy decisions being communicated via Twitter, which just smooths things out a wee bit further. And I think, Peter, you spoke about, are we going to continue to have showbiz politicians moving forward? Are we going to see a bit more of a return back to the good old days? And that's where I mentioned kind of, you almost want the boring politicians back, don't you? Like, I mentioned John Major, and that's when that then made you hungry to go and have a curry after that, Peter, didn't it?
It did, and I did.
You did have your curry, did you? Yeah.
Couldn't get that in my head for the rest of the day. It is very interesting, and we'll see how things. I thought it was quite notable in the week that I think one of Joe Biden's first round of calls was to Boris Johnson. I think he rang 4 or 5 EU leaders, and I think Boris was one of the first, if not the first, because there'd been a bit of chatter about, are we at the back of the queue again now, and where does that leave a US UK trade deal? But I think Biden did Boris a favour there, because there was, if you look over the weekend, there was a bit of, it was mounting up around Boris hasn't said well done to President-elect Biden because he doesn't want to upset President Trump. So he'd held back on the congratulations. So I think Joe Biden reaching out to Boris was potentially we don't know exactly what was in the call, of course, but I'd be amazed if Joe Biden didn't, ask for something, having reached out an olive branch like that. I think just going back to the Downing Street stuff you mentioned, it is playground, but it is also absolutely what just happens in politics. There's plenty of examples of that over every government there's probably ever been and never will be. But it's interesting that given that Lee Kane, who's his director of communications, and Dominic Cummings, as you mentioned, Dan, look to be going, why they're not going straight away. Normally, when people leave because they're falling out, you just go. But they're hanging around to the end of the year, which that little nuance, I slightly always pick up on those things about why is that? Why are they hanging around? if the relationship's dead, then off you go. You just leave. You do a Michael Heseltine and you just walk out.
Yeah.
There's probably a little bit of not wanting to leave before Brexit is done. Probably a deal is sorted because, of course, the thing that Lee Kane and Dominic Cummings have got in common is they are the Vote Leave crowd, and there's 2 or 3 other people from that Vote Leave team in Downing Street. That team's a lot weaker if they leave now, just at the moment that a deal could be getting done or not. So I suspect it's a little bit of let's hang around here just to make sure it happens and secure our legacy, make sure that doesn't get brushed aside, and then we'll wander off. But who knows?
No, it does, Peter. I think it raises a slightly wider political point as well, which is there was always half whispering anyway that Boris Johnson was just he probably was never going to serve his 4-year term as Prime Minister anyway. There's always been this suspicion that this was a chap who came in, kind of wanted to spend this year getting Brexit done, then probably spend some of next year, making sure it's a smooth transition, so to speak, and it's working, and then probably silently exit anyway. So you do start to wonder, is this the beginning of it? Because certainly Johnson's, none of us have had the year we wanted to have, but this is certainly not the year Johnson wanted to have as Prime Minister. The one he's just had, where he's had to be an operational Prime Minister this year. If you kind of look at it from that type of managerial side of things, this year would have suited an operational Prime Minister, someone who got right into the ribs of things and sorted things out. And that's where he's been roundly criticised for how him and his government have dealt with Corona, this side of things, where you could say it's not been his talent at all. So maybe Cummings and the other chap, Lee, maybe this is the beginning of that whole Brexit guard looking to start to exit. So I think time will tell on that one.
Mark, one thing we haven't talked too much about was the GDP figures that came out yesterday. I think we're very, very positive as well. And I know we're officially out of recession, which is good. But tell us a bit about that. Is that another good sign, do you think?
Well, it's not a bad sign, Peter. 15.5% quarter on quarter. You've got to put it into context. If we were looking, if you just heard me say that, and nobody knew what had happened in the previous 9 months, in the previous 12 months, you would think, bloody hell, the UK's overtaking China here in terms of growth. But it's all relative. So yeah, it was all right, Peter. It's better than it being negative, but I wouldn't pin too much on the 15.5% quarter on quarter growth continuing in future months. I think just coming back onto what we were saying there a little bit, the ship has sailed a little bit on getting a trade deal with the US until we can re-engage at least in January with the Biden administration. And we're sitting here still with only one trade deal signed with Japan. And that's been the position. It's been 1-0 for such a long time. We're just got to get going on this. We really have to. Time is running out. So it'll be interesting to see what happens. And it speaks to market resilience again. The markets will find a way through this, and we will find a way through it as well, Peter, when we're dealing with clients' investments. Just a little bit of a point. I was talking to one of our close associates last night, and we're talking about the US administration and the way the US government is run much differently to the UK government, where the civil service in the UK stays a constant, despite what Dominic Cummings would like to do to it. And when a new government comes into play, you've got all of that backup, which has been there for years and years of experience. The US is a much, much different situation where it's a total change of administration. And if anybody would like to have some weekend reading, there's a book called The Fifth Risk by Michael Lewis, which details how the Trump government the Trump administration handled the victory, and how the Obama side had laid things out nicely for them, and how the the Trump world reacted to it. It's interesting. Have a read of it if you can. It will not take too long, but it's worth spending a few hours on that, and it'll set you up to see what's happening in January. You know, it won't be just a very, very smooth transition from Republican to Democrat.
It's a good tip. There was it reminds me, there was a great cartoon. It might have been in the Telegraph or the Times at the weekend, and of course you mentioned it there. You know, when George W. Bush handed over to Barack Obama, you know, and that was a pretty bit of contest, although I know it was John McCain at the time because George W. Bush's term was ending anyway. But it was a very smooth transition, and there's pictures of them in the Rose Garden, you know, walking through, and Obama, you know, did the equivalent for Trump. But then there was a great cartoon in the paper of Joe Biden walking into the Oval Office, and they're being emptied. You know, all the flags were on the floor. The table was tipped over. There was burger boxes strewn everywhere. The place was an absolute tip. And you just think, yeah, maybe that's not going to be too far from the truth. But anyway, who knows? Mark, we're going to probably draw to a close. We've done a good hour of interesting, covered a lot of ground there. But you mentioned some weekend reading. That's a great tip. So I'll just get your plans for the weekend, gentlemen. I'll start with you, Mark, apart because you've presumably read that book now. So
I've read it. I might read it again, Peter, because I enjoyed it first time round. Rather than say what I'm going to do at the weekend, I've got a question for Daniel, because I've noticed a couple of times he's been taking a drink there, and it looks like he's just taking a drink out of Bombay Sapphire bottle. Is that right, Daniel?
The only way I can get through the podcast is to drink gin, Mark. No, it's a blue bottle of water, Mark. Don't fear not.
Right.
Fear not.
Okay. The only way you can get a podcast is through gin. Who do you think you are, a listener?
I thought it was going to be Daniel's version of the blue wave that never happened.
All right. Well, we'll take that as Mark's a subtle suggestion that Mark might be hitting the bottle this weekend. Daniel, since you already have, any plans?
I'm just going to sleep my hangover off all weekend, I think. No, a bit more studying again, Peter. I'm in week 2 of this 6-week course, so doing some of that. Hopefully get out on the bikes with the kids tomorrow as well. And you mentioned curries. It's Diwali tomorrow night as well, so I might even celebrate that with getting a takeaway as well.
Oh, good. Sounds good. Come on, Jeff, beat that.
A bit like Dan, I'm hoping to get out if this weather stays. So if it stays nice and sunny, I'm hoping to get out with the boys and the bikes as well. So I'm hoping that sustains, but I haven't looked at the weather forecast yet. So please don't anybody tell me if it is going to rain.
Mark will introduce that black cloud to you later, Jeff.
Good. Well, everyone stay out of trouble then today, Friday the 13th. Keep yourself nice and safe. And thanks very much for all of your insights and thoughts today on the podcast. So thank you, Jeff, Daniel, and Mark. And thanks also to you for tuning in as well this week. Don't forget to subscribe, and hopefully we'll see you again next week.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.